Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 23rd. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings to help you prepare for the week ahead. So Ed, all eyes on Nvidia coming up next week. What else do you have on deck for us today?
Yeah, I'm going to spend a lot of time on Nvidia, but I also want to take a look at Birkenstock and Abercrombie and Fitch.
All right, well, let's get to Nvidia then. The AI powerhouse is scheduled to report Q2 earnings on Wednesday, August 28th. Earnings are expected to surge 138% to 64 cents per share, and revenue is expected to rise 112% to 28.65 billion. And here's why we're watching Nvidia. I mean, this is really what is driving the market right now. We'll want to see if executives provide confirmation of the reported Blackwell chip delay. And will customers wait for the next gen AI chips or buy more of the current generation Hopper chips? If that's the case, we'll also want to see if there are any signs of a pause in spending by major cloud service providers. And we're also going to want to see if there's an update on NVIDIA's China specific AI chip. All right, Ed. So, as we all know, NVIDIA, one of the biggest names out there, really driving the market. So, what are your thoughts heading into earnings?
As you say, it's the most important stock, the most important company in the market over the past couple of years. I mean, the AI revolution, along with maybe hopes for Fed rate cuts, have been driving the market rally in 2024. So Nvidia earnings just absolutely huge. It's going to be amazing earnings again. They're going to be great, and presumably they'll at least probably beat. I think they'll be more concerned about guidance, given that there's been these reports that their next generation chip is going to be delayed by a few months. That won't affect things probably for the next quarter, but maybe in the following quarter at the end of the calendar year, and then maybe the early next year. Because so that's where all that is. So are they signaling that their growth and that AI spending in general is very strong? And we saw some pretty positive comments from the likes of Microsoft and Meta, Amazon about their AI spending. So that's all been positive. But now Nvidia, it's a month later, and this is the real name. Can they deliver? And what's their outlook? Because obviously expectations are high.
All right. Well, expectations are high, and so are share prices right now. Ed, let's go to the chart. Starting on the daily, Nvidia working on a cut base with an official buy point of 140.76. Probably could have keyed off the 50-day line here as an early entry, but what are your thoughts on the technical action? And if you're in Nvidia, how are you handling earnings? And if you want to get in, how are you going to be looking at results?
Yeah, I think for anybody who's held it, from the last breakout or earlier, they could probably hold it. I mean, you might end up, it could be ugly if it sells off, but that's a pretty decent cushion. We're talking about 25% or so from here. So that seems pretty reasonable and much bigger cushion for longer term investors. For people who just bought on the 50-day line, there's more of a decision to make because there's really not much cushion there. Yeah, that could have been an early entry. It's possible that Nvidia will form a handle on at least a weekly chart. We'll see. We'll see. It's right now, it's fractionally lower. It needs to be lower for the week. That's not much of a handle. There's a bit of a shakeout. So you could probably use this week's highs as sort of a pseudo handle, if it on earnings, like if it moved above that. You could use on the daily chart, there's the 135 level or so, I think, or 136. And that could also be sort of like seen as a lopsided double bottom. It's also around a closing high. So lots of little places where you could buy it. Relative strength line still holding up reasonably well. It's not that far from record highs, even though the stock is still off highs. What this does, what Nvidia does, there's so many other stocks that are going to move off of this. It's just beyond the whole market. So this is one of the most important earnings reports. I think with the market rally sort of just getting going for a few weeks, and with the concerns about the Blackwell chip, it is so important. I will say one other thing on the technical side. It's sold off on high volume, and if you notice, there really wasn't any volume on the way back up. So that's one concern, and you certainly like to see it on earnings. There's going to be volume, whether the stock goes up or down, but you would like to see some volume as this makes a move up. So I think that would be probably the weakest part technically, is that we haven't seen institutions really piling into this name, and maybe so with a lot of news that's coming up, including Nvidia.
Right. And as you mentioned, the fundamentals here just absolutely incredible. But yeah, we've seen that growth, at least earnings growth, slow a little bit, but sales growth still extremely strong.
It's going to slow down. I mean, it's supposed to slow down this quarter. Then it may start going out of the triple digit zones. But this has been enormous growth. And so the question is, how much more? You can see like this fiscal year is supposed to double, but that's obviously slowing down probably in the second half of the fiscal year, and then slowing some more. But that's still really tremendous. They've been raising guidance. Can they raise guidance enough to satisfy people? Because people are probably expecting that. They're expecting a beat and a raise. And so a beat and a raise may not be enough. Just something to keep in mind, but definitely one that everybody's going to be laser focused on next Wednesday.
All right, Ed. Well, let's move on to the next name on our list. Not as big as Nvidia, but a big winner this year. That's Birkenstock. The footwear retailer is scheduled to report fiscal Q3 earnings on Thursday, August 29th. Earnings are expected to fall slightly by 24% to 57 cents per share, while revenue is expected to climb 21% to 628 million. And here's why we're watching Birkenstock. We're going to want to see if the shoemaker can maintain strong pricing power, and shares are also in a buy zone ahead of earnings. So Ed, Birkenstock, recent IPO, they beat analyst estimates last quarter and doing really well. People are really snagging up these high-end sandals. They actually saw a lot of growth in a lot of their closed-toed shoes. They're trying to expand into more styles. They're also expanding their production capacity in Germany and Portugal, and really trying to tap into markets like China and India for their growth. So what are you thinking about as Birkenstock earnings approach?
Yeah, this is like a century-old shoemaker, so it's not like total newbie like some of the other names. But yeah, it's showing a lot of growth potential and going a lot of areas. They've been able to thrive because they've been able to sell for full prices lately, and that's when by that pricing power. I mean, the retailers and the apparel makers that were able to do that, in 2023 and into 2024, like Abercrombie as well, is another name on that. But they really just had, there's nothing like a retailer loves more than selling at full price. They expect to maybe take some hits on that. Their earnings are still a little bit weak. I think there's probably still trying to figure out the shakeout from when you have an IPO, how that all transitions. So. I think people are a little forgiving on that. The revenue growth has still been strong, so that's another thing. And it's been doing very well. And for an IPO, its stock pattern has been fairly steady. I mean, a lot of IPOs have wild action, but this one does not.
All right, well, let's take a look at the chart then, Ed. And this one recently broke out here on August 15th out of the flat base with the 61.83 buy point. And it's kind of just hanging out in this buy zone right now. So what are your thoughts on the technical action here?
Yeah, there was some nice volume in there, like when it was sort of punching through to the new highs. So that was nice. Different things from Nvidia, which has had lower volume. You probably could have bought this. Maybe the time to buy it, if you were going to buy ahead of earnings, was when it went through around 60. That's not. It was an early entry. That seemed like a pretty good spot to get it. And there was some volume coming in there. But you certainly could have bought it as it went above the new high. There's not really a cushion here. So unless you bought it, say, in the prior breakout and that one or earlier, that would be an issue here, is that there hasn't been a great time to buy it. So it gapped up, it went up, but then it went sideways. And if you held it through all that, well, you're up, but it would have been tough to do that. And if you bought it on the prior breakout, well, that immediately failed. So that's been somewhat an issue. A lot of stocks, breakouts have been more difficult. So that would be something to remember. This one could gap up or gap down. And if you don't have a cushion, you may want to be thinking about taking partial profits. This is maybe one, if you're going to do, would be an earnings option. But technically, relative strength line basically at new highs. We've seen this, strong fundamentals. So there's a lot to like about this name. While the footwear group isn't doing great, we're seeing a few names looking pretty strong. There's that handful, and it's dominated by, say, Nike or some others that are getting hit that haven't done well. But there's definitely a select number of footwear plays that are in style.
Right. And I think Birkenstock's been one of the ones that has been holding up really well in this market. You mentioned Abercrombie, so let's go to that next one on our list. They report Wednesday, August 28th, and the apparel retailer is expected to see Q2 earnings rise 102% to 222 per share, and analysts expect revenue to climb 18% to 1.1 billion. And here's why we're watching Abercrombie. We expect growth is going to slow, but can it remain solid going forward? And ANF stock is also basing ahead of earnings. So, Ed, we talked about Nvidia, but Abercrombie has been one of the biggest stock market winners over the last couple of years. Like, it's right up there in terms of returns here. And, we talk about a turnaround story. Really seeing sales surge here, really good fundamentals, double-digit sales growth last year. But I think the question on investors' mind is can this win streak continue?
I mean, it can continue, but probably that huge run, because it's sort of like it's just a change the paradigm. It's like, oh, you're gonna have this. The profitability is gonna be much stronger because 2022, or a couple of years ago, not very strong. Then all of a sudden, the last fiscal year, just explosive growth. I mean, sales growth was strong, and that's great, pretty strong. But the profits exploded because the pricing was full. They had low inventory. I mean, it was just perfect. I mean, they could just leverage it. So, one on a mammoth run. Can it go on that kind of run? Well, it seems unlikely given that growth is probably going to slow. I mean, partly because of comparisons and partly because their inventory levels are probably higher now. And so it just becomes a little bit tougher to maintain that extreme pricing for a long time. But this has been a really big winner. So then the question is, okay, growth is going to slow, but can they maintain like double-digit growth? And it's not clear that that is going to be the case. But that would be an issue, one something they want to look for. We saw with Urban Outfitters, which reported this week, hasn't done as well as Abercrombie, but it's still in the same group and kind of situation. They disappointed, and so that stock sold off. So you have to watch out for it. If the tide turns, this one, the numbers, could start weakening considerably. But boy, what a performance over the last 18 months or so.
Right. And let's go to the chart here, because as you can see, mammoth run here over the last year or so. And you mentioned just monster growth here. But let's take a look at the daily, Ed, because as we mentioned, this one's basing 196.99 official buy point. Recently retook that 50-day line. So give me your thoughts on Abercrombie's chart.
It seems to be doing fine here. I mean, it seems to be trying to maybe form a handle, which would probably be, that would be above the midpoint, it looks like, if it paused here, right above the 50-day line. So if it moved above this area on, on earnings, that would probably be buyable. There, it sort of looks like it could line up with the trend line, all of that together, like, from the top of the base, and just sort of drawing it across, and just sort of, it seems like it would be in that area. So all these things sort of line up. That would seem like to be a good spot. But again, with earnings, you'd want to see how that is on earnings. It did find support at the 200-day line, when the market had that whole horrible, let's just put your thumb over those days kind of sell off. So it bounced back. It's doing pretty well. The relative strength line, which went on a tremendous run, it's fallen because it's been basing for a few months, and until recently the market went up, but it's not that far off. So this could definitely go on another run. Could it go on that same kind of 900% run or whatever it was? That seems extremely unlikely. That doesn't mean it can't continue to do well. Just have to, put your perspective on what might happen here. But the revenue growth, the earnings growth went from 26 cents. It had a horrible fiscal 2023, which is basically 2022, and then went to 2024, just absolutely enormous. I mean, that's just amazing growth, and it's supposed to, but within a few months, in a few quarters, it's supposed to actually go negative. That would be something. Can they maintain the earnings growth? I think that's really what people want to see.
All right, Ed. Well, we'll be keeping an eye on that. And those were some of the big earnings on our radar next week. But let's take a look at some more, starting with CrowdStrike. As we all know, it's been in the doghouse a little bit with the blue screen of death debacle. But we can see a lot of damage to this chart. And, it seems like it's trying to come back here to this 200-day line. So thoughts on CrowdStrike, and what are you maybe hoping to hear from earnings when they report next week?
Yeah, and you can see this technical the bounce has come on much lighter volume. And of course, the volume is going to be lighter, but it hasn't been, so it hasn't been anemic. It's just anemic compared to those past few weeks. Yeah, are they losing business? I mean, this news basically came out when the quarter was almost over, so that's the quarter may be fine. It's the guidance that's going to come out, and it's a customer. What are they going to say about how many customers they're losing? I think the CEO or one of their top execs was complaining about rivals trying to poach customers, thinking that that's not fair. It's like, well, that's sort of what's going to happen. That's not a good sign, that concern. And we'll see how much it is. Another name that reports this week is Sentinel One, which is sort of I've referred to one time as a poor man's CrowdStrike, like a cheaper version, maybe not as advanced. And again, that was a while ago. I don't know how fair that is. That's ticker S. So we'll see how that one does. They got an analyst upgrade recently. So that's around maybe an early entry amid hopes that it will. You can see that it bounced initially. That's about where CrowdStrike tumbled, because the thought is that Sentinel One would be among the winners. We've seen some other names pick up, and it could be that some other bigger cybersecurity names are grabbing customers as well. So CrowdStrike's pain, to what extent could be rivals' gain. So it'll be very interesting to see CrowdStrike and Sentinel One.
All right, well, let's take a look at Salesforce, which also reports next week, Ed. And again, this one in consolidation, 318.71 buy point. But, a lot of the recent base here under that 200-day line, and it looks like it's maybe hitting resistance there over the last week.
Yeah, I mean, you could like, there might be some kind of trend line entry that if it could break above that, at the same time it breaks above the 200-day line on earnings. But the thing is, it hasn't been performing particularly well. It just, it hasn't come back. It's sold off quite a bit. Some other software names are doing better, some smaller ones, but also some bigger ones like ServiceNow. So it just doesn't seem like a leader right now. Now they turn around, they come out with great results, then it's like, well, we'll reassess. I mean, it's just sort of, but right now, look, it's still important because this is one of the biggest names out there. So you want to see that, but it seems like this one is lagging and needs to show some strength before it would start coming on people's radar seriously again.
All right, let's take a look at Alli's Bargain Outlets, which reports earnings on August 29th. And, this one looks like it's trying to hold itself above the 50-day line. Had a breakout here in May and almost came back down to that level with the market pullback recently. But it's rebounded very nicely. And we've seen a lot of this V action, a lot of stocks just rebounding really nicely. So what are your thoughts with Alli?
Yeah, I mean, V-shaped bases aren't that aesthetically pleasing because they often struggle. At some point, it's like, well, where's the big pullback going to come? So it'd be great if it could pause over the next several days and then maybe punch higher, maybe above the 100 level, because it traded tightly around just below 100 before briefly getting above and then giving that up. But it seems like the 100 level still is relevant, beyond being just a nice round number. So that would be ideal if it could sort of pause for a few days, then punch higher. It's still one of the better names out there. Defensive growth, retail, this is an area of strength. Even whether the economy gets a little weaker, a little stronger, this one should do relatively well.
All right, well, let's take a look at NetApp, Ed. This one also reporting next week. We've got a cup base here with a 135.01 official buy point. So what are your thoughts on this chart?
This has been doing great, really held up. When you look at that, RS line is basically at highs. While other stocks came back below their bases, this one really didn't. I guess maybe it came down toward the top of that base because there was such a high top. The top of that prior base was at 112 technically, but it's still big strong advance here. Storage is a key area. It's become sort of an AI area, even though we haven't talked about it much. So this is looking quite good. It'd be great if it would pull back a little bit. Again, not be V-shaped, get a handle just a little bit. It would be nice to see, but definitely one that's quietly been a real leader here.
All right, let's take a look at Nutanix. They are reporting next week as well. And this one, Ed, looks like it's got some work to do. Recently retook that 50-day line, but technically not looking so strong.
Yeah, and I wanted to look at this one because this is a software play that's in the storage area. So it's sort of a rival to NetApp and Pure Storage, which also reports, but this one was sort of the leader. And then boy, that earnings report, that changed things. I mean, it did. So we'll have to see if it can bounce back. It had some strong growth in there, and the earnings are still great. It's just, but it really disappointed, I think, with the guidance. So a lot of heavy volume selling along the way. Needs to get back.
All right, well, you mentioned Pure Storage, so let's take a look at that. They're reporting next week as well. This one also basing 70.41 official buy point, but trying to retake this 50-day line, but that looks to be maybe a possible level of resistance.
Yeah, I mean that one is like in between the two. Breaks above there, maybe it has some strong action. The numbers are turning around. Like they had some weaker growth for one quarter, and that's partly because it was shifting to a subscription base. And so maybe that's transitioning out. So you don't get the revenue right away, but the thing is it piles on. A lot of other companies have done that in prior years, and this one's finally coming on. And so that would be one that would be possibly actionable there.
All right, let's take a look at Dell Technologies then. Again, this one seems like really broke down over the last few weeks, but trying to establish itself back above that 200-day line.
Yeah, I mean, this is a AI server and storage play in addition to PC. So you can see that the growth has not been that tremendous. It had been on a pretty strong run for a company that honestly wasn't growing that well because there's a lot of anticipation that things will turn around. So we need to see that growth. I mean, let's be clear, it doubled for, pretty quick, doubled or almost tripled in a pretty short time. And it's not really there yet. So we'll have to see how that all develops. And it has a lot of the pieces, you'd say, but some of those areas, like some of the AI server plays, those have sold off a lot. But yeah, need to see the growth here.
All right, well, let's take a look at Foot Locker. This one in a long cut base 35.60 buy point here. What are your thoughts with Foot Locker, Ed?
Yeah, I mean, this is one, there's a few plays that are doing all right, like Dick's Sporting Goods, which is more diversified. That one has broken out. Foot Locker sort of ramped up and is now sort of forming a handle. Be great if they pull back a little bit, more of a shakeout, because you want to scare people. I mean, why we like handles is we want to get people a little scared, just a little bit. So you shake out a few people, but that's not really, if a handle isn't doing that, it's a pause and that's nice, but you'd like to see more. But sort of nitpicking there, that handle is sort of right around this prior buy point around 32 from several months ago when we had a failed breakout because it broke out. Then earnings, look at that, look how nice it looked, and then earnings came. So this is why you have to watch out. Everything's fine, and then it tanked, and then it came back with earnings. So this is a stock. It seems like boring. They sell shoes in a mall. How much can that be? And yet the stock has enormous moves on earnings. So again, that's the case with a lot of these stocks. Even when it seems like a boring stock, this one moves a lot on earnings. So watch out for that.
All right, well, let's take a look at a couple of China names then, starting with PDD. This one also basing 164.69 official buy point here. So what are your thoughts here?
Yeah, I mean, this one might have a handle in a few days, so that would be nice to lower that. It needs a couple more days on that front. PDD, which does Pinduoduo in China and Temu around the world, including the US. That's why it's been so strong in the growth, is because of the overseas Temu. That growth is going to start slowing down as the comparisons get tougher, even though we don't get a real breakdown on sales so much, but that's clearly been driving it. The China market isn't doing so great, just in general. They've been outperforming, but you'd rather outperform in a strong market than outperform in a difficult market. So that's an issue. Still strong growth. A lot of e-commerce plays around the world are doing well, including its Southeast Asia rival, C Limited. So there's a lot of names that, even though this group isn't the hottest, there's a lot of these international e-commerce firms that are doing pretty well. So definitely worth watching. This is one of the few China names that, looks attractive, looks potentially there. The fundamentals have been really strong. So definitely worth watching. But yeah, definitely, it's a tough market at home for sure.
All right, well, let's take a look at Li Auto then, the Chinese EV maker. And this one seems like it's really struggling, trading well below the 200-day line, and looks like it's trying to get back above that 50-day line. And what are your thoughts here, Ed? This one, was a big winner, but it seems like fortunes have turned.
Yeah, I mean, the thing is, a lot of rivals, they came out with a new product, their first all-electric vehicle, and boy, that didn't work, and that's been a real bust. And the sales, like they slashed estimates a few weeks after the top there, and they like basically, like within a couple of weeks, cut their monthly forecast almost in half. And it just shook people because people, you can sort of talk because they kept on beating views and beating views, and people start thinking, well, they could keep growing and growing and growing, and you can start doing those charts where you start doing exponential and just sort of go out this way. And there's like, it was this huge the valuation has come way down. Maybe they can turn that around, but the earnings are now going to be falling this year. We'll see about next year. I don't know how much conviction people have in that. The China EV market, while it's still growing, it is a very fiercely competitive. They're facing competition on the high end among its premium offerings, and it's gone more into the mainstream market, and there's plenty of rivals there. So while they have the potential to show a lot of growth in the next year, they also have the potential to see a big drop in sales. And I don't mean pick on them. That sort of is the case for all the EV makers in China. So it's just tough. If you don't have much conviction that the growth will come out there, it's hard to really put a premium on the valuation. And it had that a few months ago, and it really doesn't have it now.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Coram. That goes live after the closing bell. And thanks so much for watching. We'll see you next week.